Uh, in the first go around, yeah, you're probably going to see 5 or 10 big banks that are supported by the Treasury, and they're probably going to make it. And that's their goal. Their goal is to foist the CBDC, central bank digital currency, on us so that they can watch, see, and even control everything that we do financially. They can see if you buy a stick of bubble gum. They can watch this interview and shut your account and shut my account off. So yeah, they are definitely going to try to save the big banks, and it makes sense from the standpoint of, if they're going to come out with a central bank digital currency, is it easier to do it with 10,000 different banks or 10 different banks? With 10 different banks, it's way easier to coordinate, and they can use cover of, well, the system collapsed, but we still have these banks, your money's safe, blah, blah, blah. And then they come up with the CBDC.
Bill Holter warns that the US government is preparing to implement a central bank digital currency, CBDC, that could devastate our economy. Last Friday, silver trading equaled the entire annual mine supply, a clear manipulation to suppress precious metals in favor of fiat currency. Holter predicts a collapse of multiple banks, leaving only a handful of mega banks supported by the Treasury. This, he argues, paves the way for the CBDC, enabling the government to monitor and control every financial transaction. Imagine every penny you spend being tracked and your financial freedom restricted. Holter points out that our current coinage is essentially worthless and suggests that pre-1964 silver coins may be our only refuge. As we face these unprecedented economic changes, it's crucial to understand how these developments could impact your savings and investments. Could your bank withstand another financial crisis? Are your investments truly safe? Holter's insights provide a sobering look at a possible future where traditional money loses its value and new forms of digital currency take over.
As far as the metals are concerned, they broke out. I put an article out on May 11th. Not an article, basically. I put it up on my website. I showed some charts and said that it is likely that gold would go to new highs, silver would break over $30. And that did happen. We got up to about $32.50 on silver. We got to $24.50 on gold. They were both severely overbought, and were overbought for a fair amount of time. So those gains were naturally going to be digested. And of course, you got the powers that be that don't want higher gold, don't want higher silver prices because they're direct competition to fiat. I think it was last Friday, there was basically the amount of silver that's mined in a year's time, that was equal to the amount of trading that was done on COMEX on Friday. So, I mean, they smashed this with paper again. I did put an article up, I believe it was Sunday or Monday, with the same charts. We're definitely no longer overbought. We're closer to oversold than overbought. Silver, well, first we'll start with gold. Gold has pulled back to this 2280, 2300 level. So we've had a pullback there. Silver has pulled back. I think it got down as low as 2875, 2880, something like that. And on the chart that I showed, there's definitely support at the 2850, 29 level. And there's a moving average that's right here at 29. And if you look at what I talked about in the first article, the MACD, the moving average convergence divergence, has declined, and at this point, fairly close to forming another hook to turning to the upside. So silver pulling back to 29 is absolutely where you should have thought that it would pull back. I mean, nothing goes straight up. Nothing will go straight up until we have a revaluation. Then it'll be like a light switch, and poof, you'll have new prices that are totally unrecognizable. On this move, on the next move higher, and I think the next move higher you could see it beginning immediately. I think we're in the bottoming. We're digging on that $29 level as we speak. I think this is going to bring us probably to the 34 to 37 level. We'll be overbought, and you'll see another pullback. And then I believe that 32.50, the previous high, or 32 range, will again be the support. So this is it's totally natural. Anybody who was disappointed that gold or silver didn't keep going once it hit 32, 32.50, you don't understand how markets, normal markets work. And these are not normal markets. But when you get as severely overbought as we were, you're going to get a pullback, and we have had that. Yeah, current coinage is it's worthless, basically. I mean, yeah, nickel's got value, and nickel might be a nickel. I don't even know where it is now, but it might be worth 6 or 7 cents. Who knows? But who cares? What's going to have value when all this is said and done is not going to be dollars. It's not going to be current coinage. It's going to be what's real, what's inside the coin. And pre-1964 dimes and quarters are 90% silver. And that's what they're valued at, is the silver value. So, I mean, don't get caught up in worrying about, quote, nickels or dimes, current nickels or dimes, because that's what they are. They're nothings. I mean, you could have $1,000 worth of nickels or dimes, and it might be, it might, in the terms of nickels, because of the nickel that's in there, like I said, it might be worth 6 or 7 cents. So, but I mean, look at a dime. A dime is worth $2 or a little more than $2 at this point, 1964. So, your true store of value and the way things will be bartered when the system goes down, the way you're going to pay a farmer is going to be dimes and quarters pre-1964 and earlier. I would say that it pretty much doesn't matter. You should only keep in a bank, what your bills are going to be for the next 6 months to a year. Even if your bank doesn't fail, you're going to be left with dollars that are going to be devalued in a drastic manner. But my thought process is the banks as a whole are going to collapse. There's not going to be anything standing. I guess the best way to say it is, okay, so they don't invest in real estate, but there's been a global run out of U.S. treasuries. Your bank definitely holds U.S. treasuries. So, now they've had their balance sheet devalued. Is your bank going to survive if the treasury doesn't? In the first go around, yeah, you're probably going to see 5 or 10 big banks that are supported by the treasury, and they're probably going to make it. And that's their goal. Their goal is to foist the CBDC, central bank digital currency, on us so that they can watch, see, and even control everything that we do financially. They can see if you buy a stick of bubble gum. They can watch this interview and shut your account and shut my account off. So yeah, they are definitely going to try to save the big banks, and it makes sense from the standpoint of, if they're going to come out with a central bank digital currency, is it easier to do it with 10,000 different banks or 10 different banks? With 10 different banks, it's way easier to coordinate. And, they can use cover of, well, the system collapsed, but we still have these banks, your money's safe, blah, blah, blah. And then they come up with the CBDC. Yeah, absolutely. Anything that your broker holds is on their balance sheet. And that's, go back, read The Great Taking, understand that these laws are actually in place. This is not speculation. The laws have been put in place all over the world. And when these institutions go down, you don't actually, it's not a deposit at the bank. The stocks in a broker are not actually yours. They're on the bank's balance sheet, and they will bail your capital in to try to save themselves. let me put something out there, and this may help some people to understand why or how exactly this scam works. So you go to your broker and you deposit $100,000, $1 million, $10 million, whatever, and you do a bunch of trades, and every trade costs you $7.95. Do you really believe that a business model that charges customers to trade $1 million worth of stock and the commission is $7.95 is actually a business model? I mean, these companies have huge skyscrapers. They got private jets. The upper echelon drive around in Lamborghinis. How do they do that? On $7.95 per trade. It's an impossibility. The way they do that is you bring your $1 million in, you buy a bunch of stocks, and before the end of the day, those stocks are already lent out. That's how they make their money. They lend them out to short sellers. They lend them out to be used as collateral. And if they're lent out, are they yours? I mean, can you understand that concept that if your shares are lent and someone else has control of those, and all of a sudden the music stops, are those shares yours? Are they the brokers, or are they who the shares got lent to? The only thing I can tell you is they're not yours.